Hello friends, welcome. Today I received a lot of news from investors why the market is so bullish, especially in October. So if you are a stock investor and today you are looking at my Facebook live, can you give me a thumbs up? Okay, just give me a thumbs up. Okay, let me see how many people are interested in this topic. Okay. So we are having Facebook live talking about stock market, why the stock market is so bullish now. And if you like this video, do share to your loved ones, and I really hope it can benefit them. I do feel that 2023 will be a turnaround year. The market may go into what we call a multi-year bull market. A multi-year bull market. So let us see whether there are some audience in the room now. And if you know, yesterday, Federal Reserve Jerome Powell said something about the interest rate. They are going to slow down the rise of interest rate. And I don't think it's only a slowdown. In fact, in the next few months, they may even decide to decrease interest rate. Why? Later, I'm going to share with you the reason. So this is a short Facebook Live. Wow, I can see there are some audience here in the room. Hi, Kenneth. Hi, Joe. Hi, David SY. Okay, our friend. Okay, thank you for being in the room. Okay, so today I just want to address the concern about the stock market this year. The stock market has really crashed. S&P 500 index has dropped slightly more than 20%, reaching almost as much as a 25% drop. But then again, the bottom did come somewhere around mid of October. So I'm going to explain to you why there is a change in sentiment and why perhaps in the next few months, even Federal Reserve may change their monetary decision from what we call a tightening policy to a loosening policy. Okay, so if you are in the Facebook live or YouTube live, can you say hi to me so that I know you're in the room? Hi Andy, hi Chi Xiong, hi John Siu. Okay, and do help me share this video to a loved one because there's some information that's very important. So if you have missed out on the bottoming of some shares somewhere around June to September, October period, don't miss out in the next few years of what I call a multi-year bull market run. Okay, so the first thing I'm going to share, of course, before I share any of my own opinion, there's a bit of disclaimer. I need to share with you. Anything that got to do with investment, there's always some risk. It's our job as an investor to know how to control our risk and do have strict money management practice. Okay. Okay, this is the chart of S&P 500 index. As you all know, if you have been playing US stock market, a lot of markets in the world has bottomed in October. STI, our local Singapore Straits Times Index, bottomed somewhere around slightly below 3,000 points in mid of October and has been running continuously until today, okay, meeting its resistance at 3,003. The same with Hang Seng Index. It bottomed somewhere around 15,000 and it has gone up almost $2,000 to $3,000. S&P 500 index has bottomed somewhere around mid of October around 3,500 points, and today it has run up almost near to 600 points. 600 points around $4,086 yesterday. $4,086. Okay. And if some of you have been keeping track, okay, what happened yesterday is there is a big white candle. There's a big what we call Marabusu candle. It does mean a very strong bullish run yesterday. So yesterday S&P 500 index went from 3,957 to end the day at somewhere around 4,091. 4,091. Okay, I would say it's a very big rise of around 1,000 point, and 100 point. And if you know Nasdaq yesterday in one day went up 3%. So a lot of so-called positive sentiment, okay, going into perhaps this what we call the festive season. Okay, so after the great Black Friday sales over the weekend, which hit historical high, by the way. So a lot of people are concerned with how consumers spend money, okay, this year end, right? So it doesn't affect US at all. In fact, they hit historical high on a Black Friday weekend. And of course, one thing is because they adopt this what we call buy now sell later policy. Okay, so it has been a good weekend, and the positive sentiment boiled over into yesterday stock market. Okay, and one of the reason is because of this news. Yesterday, Jerome Powell said that this interest rate might start to, the rise of interest rate might start to slow down. Of course, he did not say we are really pivoting. Now Wall Street is already expecting a pivot. So I want you to remember this, okay? Next year, most likely Federal Reserve will start to pivot, okay? So this is a new word, okay, in the stock market. We call pivot. I've never heard of this word before, okay? Basically, it means a 180-degree change in the monetary policy. But let us see one of the article that come out from Reuters, okay? After Jerome Powell's speech. So what happened is, he said this. Okay, let me see the words that are important here. Okay, so sorry, just now I saw the words. Okay, I think basically it means, okay, it's not quoted here. Okay, let me search with the Google search engine. Jerome Powell. Okay, yeah. So this is a news from CNBC. It was mentioned that Jerome Powell expect a smaller interest rate hike starting from this month, okay, which is the month of December, okay? So meaning that, okay, in fact, Wall Street expect interest rate in December to rise by almost, okay, 0.5%. So given this speech, perhaps Jerome Powell have expectation of a rise of somewhere around 0.25, okay? And this is good news. It bode well for the stock market. And that's the reason for this rally. So if you look at this, what we call the charts, okay? Sometimes I study what we call the pattern of the charts, okay? So this is a strong candle. Okay, this is a very strong candle, bottom reversal pattern. Okay, this is what we call engulfing candle. Okay, engulfing candle. Okay. Whenever I see a bullish engulfing candle, or whereby the green color body actually eats up the red color body of the candle. Okay, this is the daily candle. Once you see what we call a green color body candle, it totally eats up. Okay, so basically the open and the closing price, it is up yesterday, the red color body candle. This is a very bullish reversal pattern. Okay, we call it a bullish reversal pattern, and most likely this what we call positive expectation will point into the stock market over the next few days, or it may create a new high, okay, over the last few months. So I do expect going forward into December, there might be some positive momentum. Okay, there might be some positive momentum. And in the case, if in the next few weeks there is some correction, or if there is some correction in the stock market, I strongly suggest you to look at some shares, pick up some good stocks, and start to accumulate. Okay, so let me explain to you. The most important thing today is to understand the mechanics behind the economy today. Why is it economy is pointing towards what we call a recession, but yet the stock market is so bullish today? And there are many stocks that has already reached a bottom, okay, from June to October. Stocks like, for example, Netflix. Okay, Netflix reached a bottom somewhere around $162 in May or June period, right? It has dropped 75% from the top. It reached a low at 162. And today Netflix has gone up to somewhere around $305. This stock has almost doubled its return. Okay? Almost doubled its return, 100% return, near to 100% return in a span of 6 months. What is so wrong about this market? Why is it we are talking about retrenchment? We are talking about this what we call interest rate rise. We are talking about tightening of policy, but yet the stock market has rallied. Okay, the same goes with a lot of shares. Mastercard. Okay, in October it reached a low point of 276. Today is at a high of $356. You talk about banking shares. Okay, JP Morgan. It has reached a low point in October at $100 and today is at $138. It has gone up 38% return. You talk about Caterpillar, right? This stock, it reached a low point in October, $160. Today, it went up to almost $240, a rise of more than 50% in the span of 1 month. Okay? And all these stocks have started its bullish momentum. And I will say this may be the start of a new multi-year bull market. Okay? And by the way, I think there are more people in this room today. Thank you, Feng Ling. Thank you, Tiam Liu. Okay, thank you, Hock Hua. Okay, so if you think that okay, the information here is very important for your investing friends, do help me to share with your loved ones. Okay, by sharing this video out. Okay, so I do think that the market has already bottomed somewhere October, and if some of you have paid attention to our this what we call Facebook page, you should have known uh, that I predicted somewhere around September, October, there will be a turnaround. And indeed there is. Okay, indeed there is. And let me show you some videos. Okay. Yeah. So I do have a public Facebook page, and just in case you would like to keep up to date, okay, to the recent so-called information about the stock market or opinions, okay, so you may want to like us. Okay. So you can see, this was recently a video that I published. I said that October may have what we call a potential crash, but then again, I also said that a lot of stock market bear market, it actually ends in October. So at the time, I said you can start to look at potential bottom, right? So you can see that could potentially cause the stock market to bottom in October. And indeed, that's the month whereby Dow Jones actually reached a bottom. That's the month S&P reached a bottom. That's the month Mastercard reached a bottom. So a lot of stocks actually bottom somewhere around October period. Okay, and I did say this thing: inflation will cause in the next few months stock market to rise even further. I do understand we are so afraid about inflation, we are so afraid about crude oil price, but do you know that crude oil price has tanked? Crude oil price has dropped over the last 6 months from $130 today less than $80. It went down to as low as $75. It breached almost what we call a 6 months low. Okay, so it has crashed almost 40% its price. And why is it so? Because they are no longer what we call an inflation fear. Rather, there is a deflation problem. Okay, so deflation in the next few months will be a new word. Okay, so if you look at some of my opinions like this, okay, October 26, I did say it. Don't be blinded by the pessimistic news. This multi-year bull market may have started. It may have started. Okay, and today I want to share with you two reasons why. Okay. Okay, of course, this is what Wall Street is betting today. The word, the new word, the holy grail word today is called pivot. So if you are in the room, can you please write down? The moment you hear more pivot news coming up in the next few months, it means more positive momentum is boiling in the stock market. It's time to accumulate more shares. Okay, so this pivot is the new word that is okay started by Wall Street a few months back. basically they are betting that rather than rising interest rate, there might be even a fall of interest rate. Rather than not printing money, next year, Federal Reserve might print a lot of money. And that's what we call pivot, okay? So basically, it means a 180-degree change in the monetary policy. So this is the word you need to pay attention to. So can you write down in the comment box, this word is called pivot, okay? So why is there the word pivot happening? You need to understand why, so that you are confident about the stock market today. Number one, retrenchment wave is coming. It's true, okay? It's true. A lot of tech companies, even not only tech companies, in fact, across the board in many industries, companies in US are retrenching, and they are retrenching crazily. Okay, the retrenchment wave is coming. Jobless rate will start to rise. You will see what we call the non-farm payroll, the job change start to drop drastically. Okay, that's what we call the retrenchment wave. Pay attention to US jobless rate. Pay attention to US job numbers from now onwards. The more jobs lost, the faster the pivot will be. The more they will stop interest rate from rising, and basically next year is about falling interest rate environment. Okay, so let me show you in today's context, what are the companies that have announced retrenchment? Okay, so I did my research. I go to Google search engine, I type in job loss in tech, and let me share with you, these are the technology stocks that are retrenching in 2022. Okay, 2022. Okay, you're not talking about one stock, you're not talking about two stocks, you're not talking about 10 stocks. There are hundreds of stocks, there are hundreds of companies in US announcing retrenchment. They are not retrenching perhaps 10 people like Shopee. They are retrenching sometimes thousands of people, hundreds of people. Okay, so let me just scroll down. Okay, honestly, some of the stocks I really don't know. Okay, like, okay, what we call Carvana is retrenching 4,000 workers. Okay, it's an automotive company. Okay, automotive e-commerce company. Okay, so all this, Roku is retrenching people. Okay, Roku is a well-known stock. Okay, all these companies are retrenching people. I just want to show you. Okay, Twitter is retrenching 3,700. I would say almost half of its workforce is gone, right? As announced by Elon Musk, right? So all these companies are retrenching people. Okay, Peloton. Okay, Peloton. Okay, basically it's an exercise machine company. Okay, so they are retrenching almost 4,000 workers. 4,000 workers. Okay, so some are retrenching more. Of course, some are, we cannot get the data, so it's said unclear. But they announced a retrenchment exercise. Okay, so Amazon recently retrenched around 10,000 people, right? Google. Okay, what I mean is all these are the companies that are retrenching staff. And they are not one, they are not 10, they are in the hundreds. They are in the hundreds, okay? So, what I want to share with you is, although Jerome Powell said yesterday that we need to look at the data, okay, most likely there will still be a bit of tightening ahead. And he cautioned that this tightening has not ended yet, right? But at the same time, he said he will look at data in the next few months. And this is the good news. What's the good news? The data of retrenchment hasn't been reflected yet. Most of these companies that announce retrenchment is in October or November. Recently, Amazon announced its retrenchment somewhere around October, November period. Twitter announced its retrenchment October, November period. And when they say retrenchment, sometimes they give allowance time. They have what we call exercise. Their retrenchment exercise will extend until quarter one. What does it mean? It means they are giving their workers some time to go and find jobs. They are not laying you off directly this month, right? They are giving you some time to go and find jobs, to send resume. Okay? to come up with this retrenchment package. So sometimes it takes a few months. So basically, all these companies, they are retrenching in October. They announced in October or November. The jobless rate hasn't been embedded inside the report yet. Most likely, it will be inside the report. You will start to see the jobless numbers start to rise. The jobs start to be gone somewhere around January to March period. And that's the reason why Jerome Powell dare not say that we are going to decrease interest rate from now onwards. It's because the report hasn't come out yet. So let us take a look at the jobs number now. I want you to pay attention from now onwards every single month. This jobs number called non-farm payroll change, non-farm employment report. Okay, this non-farm employment report will cause in the next few months, perhaps Federal Reserve to be very anxious about the economy, about the jobs market, and most likely this will be the fuel, the fire that will ignite what we call a drop in interest rate. Okay, so this is the jobless number I want to tell you. Okay, on Friday it will come out, means tomorrow. Okay, you need to pay attention to this number. This jobless number forecast, meaning the analyst forecast to be around 200,000 change. Last month it was 261,000, meaning it has already dropped by 61k as what is predicted by the analysts. I want you to pay attention to this number. If continuously in the next few months, I do expect the actual result to be less than forecast, meaning 200,000, there is a potential whereby the result is less than 200,000. And further which, okay, every month it keeps on dropping and dropping crazily. And let me tell you something. Morgan Stanley recently published a report. It says that if this number dropped to 100,000, Federal Reserve will turn scared. They will be so anxious about the jobs number because they want to get it right in the presidential third term, okay, so that Joe Biden can be elected. So they most likely will do something called the pivot. They will start to print money. They will start to lower down interest rate. They will start to help the economy. They will start to help the companies that are retrenching. Basically, their cash reserve is running dry. That's why they are retrenching, right? They need to help them by providing a lot of what we call stimulus measures. So now, this is the trend of Wall Street today. The more jialat the economy is, the more jialat the stock market is, the jobs is, the better is the stock market. And that's the reason why you should start to accumulate some shares. Okay? So remember, okay, this is the number that Federal Reserve is looking at. The moment these non-farm payroll jobs drop to 100,000 or less. In fact, Morgan Stanley predict by Q1 it will be negative. This jobs number will be negative. The moment it turns negative, that's where there will be a full-blown pivoting happening. Okay? The second thing I want you to pay attention to is the fear that caused stock market to crash this year. And this is what we call the hyperinflation figures. And that's the reason why Federal Reserve need to rise interest rate so drastically within a short span of a few months, from almost 0 to today near to 4%, because of hyperinflation, right? But let me share with you, my take is this figure will start to decline drastically over the next few months. Why is it so, right? You need to understand the reason why. There are two types of figures you need to understand about inflation, right? Two types, okay? First, okay, is the raw material price. Okay. The second is the consumer product price. So what is the difference? Example, to manufacture a bag of plastic bags, whereby you can buy from NTUC or supermarket, right? The moment you buy, it's called a consumer product. Okay, this plastic bag this year has risen in price along with a lot of food that you buy from supermarket. That is what we call consumer product, the end product of the supply chain line. Okay, now the raw material to manufacture a plastic bag, we all know, starts from crude oil. That is the rawest of materials, right? So same thing, today you buy cornflakes from supermarket, that's the end product. But cornflakes is made from corn flour. Okay, so basically corn prices is the raw material price we are talking about. But a lot of people pay attention to today the consumer product prices increasing drastically. Mainly, okay, the end products, but they forgot the raw material price has declined drastically. Okay, and this is what I want you to take note today. Raw material price always lead consumer price by around 6 months period. Meaning, if raw material price rises to a high point and start to drop, 6 months later, consumer product price will rise to a high point and start to drop. The moment raw material price bottom and start to increase, consumer price 6 months later will bottom and also start to increase. And today, I want you to keep track, okay, of some raw material prices. Crude oil, what we call one of the leading commodities product in the world, right, has dropped from $130 to as low as $75 recently. It has dropped almost 40% its value. And most likely what happened 6 months later, so the peak has reached somewhere around March. That's the reason why so-called the consumer product prices almost reach a peak somewhere around September period. So last month what happened? When the consumer price index come up, we call it the CPI, which is the end product prices come up. That day, Dow Jones increased by 1,300 points. That day, S&P 500 increased by 5% because Wall Street is welcoming the news of declining inflation figures in the consumer product. Finally, 6 months after the raw material price start its decline from $130. And not only crude oil start its decline, natural gas, one of the commodities that people were so afraid of amid this Russia war, right, has declined from $10 today to $6.90. $10 to almost $7 is a decline of near to 30% drop. It reached a low point in October somewhere near to $4 plus. This index has declined in 2 months from $10 to as low as $4, 50% drop in price in 2 months' time. Some of you may think raw material prices is rising drastically. No, it's falling dramatically. Wheat supposedly is a product that should rise in price because Ukraine is a wheat exporter, right? This product reached a high point at 1,003. Today is lying at a low price of $700. This product has declined almost 30 to 40% its value in the last 6 months. And that's also the reason why in October, the CPI figure start its dramatic drop. And that's the reason why Wall Street is now cheering the news. Because if this figure continue to drop in the next 6 months, as according to what happened 6 months beforehand, that happened to the raw material prices, most likely interest rate will start to drop. We don't have to maintain interest rate at a high environment anymore. We don't have to increase anymore. There is a potential chance of, again, that word, pivot. Okay? So, in the next few months, I want you to pay attention to these two numbers, right? One is the non-farm payroll that will determine whether the pivot will come, okay? As well as next week, or the CPI figures. Okay, sorry. 2 weeks later, the CPI figures, okay? Where is it? Yeah. So it will be this month, Tuesday, okay? 13th of December. the CPI month-on-month figures. Okay, let me show you the chart of this figure now. Okay, sorry, it's the year-on-year figure, not the month-on-month figure. Okay, so CPI figure reached the top somewhere around July period, right? Somewhere around July period, and it has started its decline ever since. From a high of 8.9%, it reached almost 7.7%. So I want you to keep track of this figure. I do think most likely from now onwards, this figure will dramatically crash, will dramatically drop sharply. Okay, and one of the reason is to just look at the supply figures. Okay, what we call the producer prices. Okay, let me check where is the ISM. Okay, ISM manufacturing prices here. Okay, this figure actually lead, okay, the CPI figure by almost 3 months period. Lead the CPI figure by 3 months. Okay, basically it means the manufacturing sector, the prices, the raw materials they buy, is the prices increasing or decreasing? Today I just want to show you this figure today, right? So in April, this figure reached the high point this year of 86%. 86%. And 3 months later, can you see our CPI figure in July reached a high peak, right? This figure has been declining dramatically until below 50%. And let me tell you something. If this figure dropped to less than 50%, it means the economy today is contracting. It means we are deflating. We are not inflating in terms of prices. We are deflating. 3 months later, this will be reflected in the CPI figures. So, to cut it short, what I mean is, in the next few months, there is a great possibility that Federal Reserve, judging by the data that they receive, whether is it the inflation figures, whether is it the job loss numbers, okay, the data they receive will start to reflect inside the reports. And that is when they will go full out into what we call a full pivot, okay, program. Okay, basically it means dropping of interest rate, it means starting to print money. Okay, so yesterday Federal Reserve chairman don't dare to announce a full pivot exercise yet. It's almost what I call a semi-pivot. They said that they will slow down the rise of interest rate. But judging by all these figures that give you a precursor of what will be happening, they need to do it fast. Okay? So I'm very optimistic about this stock market today. So today I just want to share some what we call economic data so that you get yourself prepared. I would say 2023 might be a very good turnaround bull market year. So hopefully, you get your hands on some of the shares that are already very cheap or almost bottoming. Okay, so today is just a short clip whereby I want to record, especially to calm the nerves of some investors who have been losing some money over the course of the last 9 months. Okay, there is a turnaround coming. There is a pivot that will be happening. Federal Reserve will do something to save this economy, to save the job markets, and they don't have to care too much about inflation figures anymore because they are about to decline. So if let's say you're interested to know what are the stocks that are now fundamentally strong but yet cheap, they are falling to a big discount. Okay, what are some of the stocks to pick up to get ready for this bull market in 2023? Do attend our investing masterclass. This is a physical class, it's free. Okay, so all you need to do is sign up for our program. Okay, you can opt for the English session or the Chinese session. Okay, the link is shown below. In this class, I'm going to share with you what are some of the fundamental strong stocks that you should look at today. What are some of the instruments that will continuously rise in price? Some of you are still looking forward to buying the property market. Okay, what will happen to property in the next year? Okay, what will happen to bond prices? What will happen to unit trusts? So in this program, in this masterclass, I'm going to share with you more tips. Okay, how to get ready for what I call the presidential third year. Okay, so normally presidential third year is the year whereby the stock market will rally crazily. I'm going to show you some of the historical data in this class. Why is it so? Okay, and number three, how do you make use of options as a leverage tool to profit from this bullish 2023? So if you are interested, all you need to do is click on the link below and try to register. Okay, and if some of your friends or relatives are interested in the stock market or are fearful about this drop in the stock market, do help me to share this video out to them. Okay, in the next few weeks, I will continuously publish some of my opinions about stock market, and I do look forward to a great turnaround in the year 2023. Okay, see you soon. Bye bye.